My hopes of interest rates improving this week were dashed this morning at about 11:13 a.m. when the mortgage markets took a tumble and interest rates went through the roof. What happened? Stay tuned. So let's take a quick look at the charts and what's really happening today. So as you can see, we're down 86 on the day, and I'm doing this video at about 3:24 p.m. on Friday. Now, typically on Fridays is not a good day to lock, but we've had an absolute slide in the interest rates just even today. Now, typically, I mentioned in last week's video that anytime you have such a severe move to the downside, and red is bad for interest rates, green is good. So it works inversely. As the bond price goes down, the yield goes up. It means interest rates go up. And conversely, when bond prices go up, yields go down, improving interest rates. That's the simplest I can put it. Anyhow, so typically what happens is when you have something go down so fast, it tends to rebound off of levels of support. Now, obviously, in this case, we had the bond market just absolutely ignored this level of support and just ran right through it. It was like a wrecking ball coming through, dropped from outer space and went through the floor, and no chance stopping it, folks. But it did hit this level here right at 99, and it seems to be holding. Now, what's a little scary about that, I'm going to take you back in time. We're going to look at a 3-year chart. Now, I'm going to go back a little further than 3 years to tell you what I'm saying. As you can see, this tremendous absolute decline. Typically, we don't have things go down this fast, which is why I'm so surprised of what's going on in the market. It was since January 6th, and I did a video on this, and I actually did a blog on what happened on January 6th. You can check it out on my YouTube channel. So that was a pretty pivotal day. And obviously, then we had just an absolute carnage since the beginning of March. But let's go back even further than 3 years, and you're going to see something very interesting. Now, this date is back in November of 2018. What we're seeing here is about a 200 basis point spread in pricing. Now, so that typical person would think, oh, wow, we've got a long way to go until we hit that. That's true. That's what's really scaring me. But even beyond that is that the interest rates that people were getting back in the if you close your loan December, January timeframe of December 2018, January 2019, you were getting about the same interest rate as you are right now. Now, what's wrong with that picture? The rates should have been much higher than they are now, right? But they're not, which tells me that there's been a lot of added cost to financing. And I was discussing this today with somebody that, where is the money going? It's either going to profit, we've had some obviously secondary marketing costs, right? That has been the source of a lot of the increases in pricing. And then just in general, loans cost more to fabricate now. So I don't know what else to say, but that's really the picture. So at the end of the day, we've got about a 200 basis point gap here that very well could be made up, which means interest rates could very easily be over 5% in the coming weeks, months, or whatever. Now, if you look back at my previous video and some of my previous videos, I made the statement that I believe interest rates are going to rebound in the near future. Now, this has to do with the conflict in Ukraine, and I won't go into it in detail, but as it stands right now, interest rates are really, really, really going up. So if you're out there negotiating for a house, lock in. Don't worry about the rates right now. And I can just tell you this, do not worry about the interest rates. Worry about getting into a house. When this cycle tends to turn back around and we live in a world of cycles, rates go up and they come down. They go up and they come down. They will come down. At some point, they will be lower than where they are today. Lock in that rate. You can refinance down the road. You can't refinance if you don't own a home. There you have it for this weekend. All I can tell you is that rates are not heading the right way. And if I were you, I'd still stay at it. I'd still look at buying a house. I wouldn't let up that process at all. Experts are still saying that we're going to have double-digit inflation. In fact, this may even lead to home prices still skyrocketing. People are now kind of running for the last pieces of toilet paper there are in the supermarkets. Like, that's such a great analogy. Anyway, hope you had a great day today and have a great week. And if you need anything, I am working. You can reach us at the information in the link, the description. And I hope you have a wonderful weekend. We'll see you on the next video.